In this video, our focus will be on the cash flow statement, and the course paper that we're going to be using, it's November 2024, Accounting Grade 12, Paper 1. This question can be found in question 2 and 2.2. The question reads as follows: complete the cash flow statement for the year ended 29 February 2024. And then what we need to do, we need to look at the additional information and see the information that we have that we will need for our cash flow statement. If we're looking at the information in A, it's the statement of comprehensive income. All that you are provided are the numbers, are the sales, cost of sales, gross profit, operating expense, operating profit, income tax, as well as net profit that we have determined in 2.1. However, we cannot always tell this were all cash bases because we have not been told any information as to whether the client makes full cash purchase and they also make full cash sales. So we don't have that information. So we need to rely on the information that is presented to us or the information that we can use to ascertain the input to our cash flow statement. If we go down in extract B, it's a financial position or statement of financial position for 2 years. So for last year, which is 28 February 2023, and the current year, which is 29 February 2024. So what information we provided? It's cash and cash equivalent. We are provided an opening balance as well as there's a question mark for the closing balance. And it does make sense because we are doing cash flow statement, and when we're doing cash flow statement, we'll then be able to arrive at the cash and cash equivalent figure. Trading stock, there is nothing much said about trading stock. SARS. So when we look at the SARS income tax, what we can see is that last year it was a liability. So it's a credit balance last year, and then this year it is an asset. It is a debit balance. So what does that mean? It means last year we were owing SARS the balance of 44,675. However, this year SARS is owing us 66,650. So what does the current year entail? It entails that we have overpaid SARS in the current year. However, last year we had underpaid SARS. So that is the important thing about the income tax that we see here on the balance sheet. And then when we move down, we are told information about ordinary share capital, and then obviously they give us ordinary share capital as well as retained income. So apologies on the first part, it's equity, which it comprises of share capital as well as retained income. And then we're given information about the loan, and when we're looking at the loan, the previous year we don't have or we don't know what was the balance, but then the current year we know that it's 5,440,000. Then we're given information about shareholders for dividends. And when we're looking at the shareholders for dividends, we have already calculated both this amount when we're doing the retained income note. So this information you already have. If you have not seen the retained income note, please go to my video that speaks of retained income note. Then you will understand how did we ascertain at the shareholders dividends amount for both last year and the current year. And then the last part is bank overdrafts. For bank overdrafts, in the previous year, we had a balance. However, this year, now our balance is only on the positive side, meaning to say we have a positive bank balance. Now, let's look at about the additional information that we are provided, which we believe you're going to need for our statement of cash flow. Remember, before we even look at the additional information, your statement of cash flow, it has to represent things that were paid in cash or amounts that were received in cash. It is a statement, or it is only the statement that is prepared on a cash basis. So statement of cash flow looks at only the cash receipt as well as the cash payment. So everything that is going to the statement, it has to be something that was actually paid during the year, or it should be something that we have received during the year. So that is an important thing that we need to understand. If we're looking at C speaks of share capital. The first part, they're telling us that on 1 March, they had an opening or their shares in issue at the beginning of the year of 1.2 million. So there's nothing that is important here, because we're not talking about buying shares or selling shares, but pretty much when you look at this, we are just told how many shares did we have when you open the year. Looking at point two, now the information that we are given for point two, it's during the year. How do I know it's during the year? Because it's 30 June 2023 and our financial year end is 29 February 2024, meaning to say it is after 1 March 2023. Therefore, it is during the year. So what did they do? They issued, that means there was cash receipt for 400,000 shares at 10 Rand each. So now how do I get the amount that they received when they issued these shares? I have to say 400 shares times 10 Rand, which is the amount per share. Then if I go down, we get information about on November 2023, 34 shares were repurchased at 1.9 per share above the average share price. So what is important when you see above average share price? It means that the actual amount for share repurchase, it is the average share price, which you would need to ascertain. You need to calculate the average share price, and then you will have to add 1.90 Rand, because we are told that when they made repurchase, it was at 1.90 Rand above the average share price. So we need to get the average share price and add this amount which was added, and then multiply by 34,000, which is the number of shares. And then when we move down, dividends and dividends payout rate. So they say dividend paid. And then when we're looking at this information, we now need all this information. So unlike in the previous question, which was about retained income, when we're looking at the current year retained income note, this part now we need all the information, including the previous year. So now one will ask, why now are we also talking about we need to include the previous year? Because the reason we need to include the previous year, if the company declares dividends at the end of the year, for example, in this case, 28 February 2023, they are not going to pay the dividends on the very same day. Probably will take a month or 2 months before the dividend is paid, which is why in the current year it's now showing paid. We don't know exactly the date it was paid, but we know the declaration was the final dividends was declared on 28 February 2023, which was the year end. Then it was subsequently paid during the 2024 financial year end. It is for that reason now for our cash flow statement, we need to ascertain what was the final dividend amount declared for the previous financial year, or rather 28 February 2023. Now that we once we've ascertained that information, then we're going to use that information for the purpose of our cash flow statement. Then we're looking at the second part is about interim dividends, which was paid, and the final one, it was declared. So what is important for you to understand is that declaration doesn't mean the cash outflow. So what does that mean? There was no cash outflow on 29 February 2024 for the dividends declared. And therefore, what does that mean to you? It simply means that you do not have to then include this amount when you're calculating your cash outflow. Yes, you might need the amount to calculate the cash outflow amount. However, for the purpose of the cash flow statement for the current year, this amount cannot be included under cash generated from operations, investing, or financing activities. They cannot form part of the amount that will be added to arrive at the full cash flow statement. Then if you move down, you're told about total dividends paid and declared for the year ended 29 February 2024, and the amount or the total amount that we are provided is 744,860. Now, what is important about this is that it's a paid and declared dividends, meaning to say this total has a cash portion and a non-cash portion. So in the non-cash portion, we need to subtract in this amount because we only concern about the cash portion. So what is important about this part is the fact that we know the cash portion is 416,000 and the balance left on the 744,860, it is indeed a non-cash portion. Then we're going to move at the dividend payout. So this basically what we need to use in order to calculate the profit. For in this case, it is not important as it was when we were calculating the retained income note. And then we're going to move to E. E speaks of loan from Smiley Bank. They said a monthly installment of 97,120, including interest, were paid. Interest capitalized amounted to 685,440. So this interest was capitalized. So meaning to say it wasn't paid. So it was capitalized, meaning to say in order for you to get to know how much was paid, then you're going to say 97,120 times 12 because it's a monthly payment and we're looking at the 12 month and then you minus the interest capitalized. Then the last part, they say net changes in cash and cash equivalent is 296,460. So meaning to say now we are told the amount of the net change in cash and cash equivalent. So what is nice about that, you do not have to then calculate the amount for operating, investing activity as well as financing activity because it has already calculated for you. You just need to bring it in that amount, and all that you need to calculate is the cash and cash equivalent at the beginning of the year, and then you minus the net changes in cash and cash equivalents, and then you get your cash and cash equivalent at the end of the year. So now that we've looked at the scenario or the question, so now we need to look at the solution. As we look at the solution, I'll be taking you through in terms of how the examiner arrived at each amount that they have presented to you. Then once we have arrived at that, you're then going to be in the position to master your accounting grade 12 going forward. I've now brought in the solution that we have, and it says cash flow statement for the year ended 29 February 2024. So it is indeed the question that we're looking at. So we know the cash flow statement is made up of three items. So it's your cash generated from operations. So those are generally interest paid, taxation paid, dividends paid, and also your profit for the year. And then cash flow from investing activities. Those are generally your investing item of the business, like your property purchased, your property sold, and then your cash flow from financing activities. Those are your financing part of your business. That will be generally your loan received or your loan paid or your shares acquired or your shares paid. So what are really the financing activities? It's what makes the business. You know, the business can be made from either the share capital or the owner contributing to the business, which is in the form of buying the shares, or it could be the business going out and acquire the loan. So in order to finance the business and have viable business, you need two forms of financing, it either through equity or through loan, which is why under financing activities, you're going to see your shares as well as the loan. Now that we have looked at the cash flow statement and we understand it broken down into three, and then now let us look at what we have in each category. So when we're looking at the first category, interest paid, there's no amount for it. Why? Because they didn't tell much about interest. The only information that we are told about interest is that there was 685,000 that was capitalized. And other than that, there's no additional information that we have about interest paid. And it's also not a very big concern for us not to know information about interest paid because we have already been provided the net changes in cash and cash equivalent. So let us look at the information that we can ascertain the amount of cash paid or cash receipt. And then we're going to move at taxation. If you move at taxation paid, I discussed with you as we are going through the scenario that the opening balance is a credit balance. So it confirms that we were owing SARS. So the amount that we were owing SARS in the previous year, in the current year, we need to pay SARS. Why we know that we need to pay SARS? Because if you don't pay SARS, SARS will charge you the interest for the outstanding balance. So for that reason, in the current year, definitely the business will have to pay SARS. What we know as well, we know that we have calculated the tax. So the tax as per statement of comprehensive income amount to 462,000. So that means that tax for the current year, it is 462,000. When we close our books, we had a closing balance and it is a debit, it meaning to say it is an asset. That means we have overpaid SARS. So how do I ascertain the amount then that I have paid to SARS during the year? Because I've made an overpayment. That means the first payment that I've made, it is it is 66,650. The amount that is owed to pay the statement of comprehensive income, and the amount that was owed when we open our books or at the beginning of the year. And then if you add all this amount, what you get, you're gonna get a minus 573,000 325. So this is a minus. It should be in bracket because it is an outflow. So it is important in the statement of cash flow to show your cash inflows as well as your cash outflows. And the reason you have to do that is because it shows that you understand an outflow, it means a minus, and an inflow, it means a positive. Then we go to the second part. When you move to the second part, now we're talking about the dividends paid. You need to know how to calculate the dividend paid. So, how the dividends paid was calculated. So, at the beginning of the year, so when the year started, the shares declared for the year end 28 February 2023 were only paid in the current year, which is 29 February 2024, current financial year that we're working on. We had 1.2 million shares outstanding, and we are told that the dividends were 17 cents per share. So for that reason, I'm going to say what were the total number of shares times 17 divided by 100. So where is 17 coming from? It's because we are told that it the declaration was 17 cents per share. So now, in order to get the amount that was declared to the shareholders for the previous year, it's 204,000. So this 204,000, it is paid in the current year because it was declared at the end of the previous financial year. And we also shown in the table that it is paid in the current year, meaning to say it further confirms that this is indeed paid in the current year. And then what else do we know? So we know that the total dividends for the year was 744,860. However, in this amount, the other part of it was only declared at year end. So what does that mean? It means it was only they only told the shareholders, but they have not physically make payment to the shareholders. For that reason, we need to subtract the amount that is declared. So this amount, it was only declared during the year ended 29 February 2024. And therefore, it doesn't affect our cash flow or it doesn't affect our bank. For that reason, we're going to have to subtract it. Then what next you're going to do? You're going to add the two, which is what was declared last year and paid this year, plus what was fully paid in the current year. And then what we're going to get, because this is a dividend payout, we're going to get a negative cash flow, which is a cash outflow. Now, cash outflow is 620,000. Then when we move to cash flow from investing activity, we do not have amount. The company might have the amount, but it was not provided to us. Why am I saying that? There is nothing that we're told about the purchase of asset or sale of asset or matters of that nature which affects the investing activities. So for that reason, we're not going to have any information under investing activities. And then we're going to move to cash flow from financing activities. So as I've already discussed with you, the financing activities are things that include your share purchase, your share buyback, your loan paid, your loan receipt. And then what do we have that will affect the financing activity? we know that they issued shares. So when they issue shares to the public, they get money. So now, how do I ascertain the amount? We're told that on 3 June 2023, which is during the year. Why is it during the year? Because it after 1 March 2023, which is the beginning or the first month of our current financial year, then we're told that they sold 400 shares and each share was worth 10 rand. So now, in order to get this amount, you're going to have to say 400,000 number of shares multiplied by the share price per share of 10 rand, and then you get 4 million. Now we're moving to the second item. What is the other second item that affects the financing activities? It's when they decided to repurchase the shares. So what is the repurchase? A repurchase is when the company says, we have so many shares out in the public. Let us buy back those shares because we need them to come back to the company to reduce the number of shares that we have out there. So then now we know that in the information that we were provided, it was not sufficient enough for us to determine the full value, right? So two things that were important that we're told. We're told that the shares where there is an average share price and then there is an additional amount which was paid of 1.90 or 190. Now, the first part you've already calculated when we're looking at the retained income note. So it is 34,000 times 190. So where we got the 190, it's the loss they made on the additional money above average share price that they paid for the shares. And then we knew that the shares, or we know rather, that the shares, it's 34,000. So 34,000 times 190, it gives us 64,600. So that is already coming from 2.1. So that information you'll be bringing in from your 2.1 or your retained income note. Then the second part is that we do not know the average price. We know those shares were sold at average price, but we do not know what is the average price. So we need to ascertain the average price and we need to find out how they arrive at 760. So I'm going to show you how they arrived at 760. So in the we are told that the opening shares that the company opened with at the beginning of the year, which was 1 March 2023, they opened with a total share price or share amount or share value of 8,160,000. So that was the opening shares. And then during the year, they made the sale. So the sale is 4 million. So now we know that the 4 million of the new issue shares and the 8,160,000, which is the total value of the shares that were already in the public, right? So now if we add the two, you get 12,160,000. How do you get 12,860,000? It is the opening balance, the total opening balance of share value, plus the shares that were sold during the year. You add the two and then you divide by the number of shares. So what are the number of shares? We're told that the shares they opened with, it was 1.2 million, and then they issued additional 400,000, and in total that gives us 1.6 million. And then if you take the total of 12,160,000 plus the 1.6 million number of shares, you get 707 rand 60 cents, which is the average share price they've used here. So now if you take 34,000, you times by average share price, then you add the loss as a result of paying more than average share price is of 1 rand 90, then you get the total. So if you add the total of the two, then we get a cash outflow. Why is it a cash outflow? Because we are making so what are we doing here? We are making a purchase. So we are buying back the shares. So for that reason, we're going to be taking our money or the company money out to the public, to the owners of those shares. So it is an outflow of cash. And then loan paid. So how do we get the loan paid? In the scenario, they told us that per month for the interest to Smiley Bank, they were paying 97,120 because we are working on a 12-month period or a year. We're going to have to multiply by 12. And moreover, we're told that the interest was capitalized. So we need to remove the interest amount, and then we're going to get what was the loan repaid. Even if we're not told that the interest was capitalized or whatever, we still need to remove the interest, because the interest would have already been considered under operations. Here we are only looking at the capital. So those parties only looking at the capital and the financing activities, which will be your loan portion repayment. For that reason, we have to subtract 685,440 for the interest, or rather relating to the interest. Now that we are done calculating for the information that we could ascertain, it is a cash outflow or cash inflow. We need to get the net changes in cash and cash equivalents. On a general sense, you should be using the operation, you add or minus investing activity, you add or minus financing activity, and get the net. However, the examiner was so lenient to you that they said, no, you do not have to worry. You know what we're going to do? We're going to provide you that amount. So just work on your taxation paid, dividend paid, your shares, as well as the loan, but do not worry about the net changes in cash and cash equivalents. And some of the reason they should have done that is because they have not provided you with investing activities information. They have not provided you the interest paid or received information. For that reason, it makes much sense that the examiner decide that they provide you the information relating to cash and cash equivalents change. Then you're going to have to bring in the amount. So this amount has been provided in the scenario, or in the question rather. So you need to bring it into your solution. And then once you've brought in, you know this amount, it was also provided. So they provided you this amount in the scenario. So all you needed to do, you needed to calculate it by taking into account the debit side and the negative side. So why are we doing that? Because last year we had the overdraft and the positive cash flow. So you need to combine the two. After you've combined the two, the balance is an overdraft. So since the balance is an overdraft, it is a negative. So you're going to take now your net changes of 296,460, then you minus your overdraft amount at the beginning of the year, then it gives you the cash and cash equivalent at the end of the year. So now this takes you at the end of your cash flow statements. Thank you so much for listening up until this far. I really appreciate to have you along. Can you please subscribe to my YouTube channel? It's Economics 199. If you are listening from TikTok, or if you are rather listening from my YouTube channel, my TikTok as well, it's also Economics 199. So please follow me, then share also my details with people that might be interested in grade 12 accounting. I'm also going to be taking you to the rest of the question paper, but that will be done on a separate video. Thank you so much. Enjoy the rest of your day.